What's going on, Shroot Stack Squad? Welcome back to the channel. If you're new, do yourselves a favor, hit that subscribe button, come join the Discord, link is in the Patreon below, because we're making wealth out here. None of this is financial advice. Now let's get into the video. Alright fam, so in this video I'm going to be going over a portfolio update and just overall market conditions and where things are sitting at. I got people asking me questions about what they should do, what they shouldn't do. And look, I show you this sort of transparency. This is not something you'll find on YouTube and many other places. I show you everything where I'm sitting in the portfolio. The goal is to grow this thing in 2 years to $1 million. Then that means going through green days and red days, and I show you this thing real time. I've been investing in the market for close to a decade now, and I've seen everything that you can think of. All the mistakes that you guys may have made, I've already made, and so I'm just trying to teach you how to kind of navigate these situations so you don't lose money. And I've already lost it, and I can give you the lessons. So just take the lessons, don't lose your own money. All right, guys. Okay, so let's take a look today. So far, it took a little hit in the morning and now going back up. What's really happening for me is this. The bulk of the money, guys, where it's sitting at. It's Disney, Apple, and then Sidious is my big pharma play that I have a lot of money sitting in. Sidious I still like. Sidious as a whole company, I think on the 14th, so in Friday, they're going to be giving an interview at Benzinga. This is going to be, I have a feeling it's still going to run up to that, and they still have yet to review those phase 3 trial results with the DMC, so still a lot of room to grow. Another thing though to mention, I remember I mentioned in one of my older videos, they were going to be doing that a conference meeting in, I think, end of the month for a potential stock split. And that's something that we do have to keep in mind moving forward, how we may want to play this stock and things like that. All right, but take a look at some of the other ones. If you got into KPTI, I mentioned that yesterday in the Discord. If you got in on that, good luck, good job. Same thing with CYCN. I told you this one the other day. These are the plays that have a lot of insider trading, and so when we see that there was a huge buy-in by, let's say, a CEO or someone like that, and we also look at cash on hand, things like that, then it's a good idea that, hey, if they're going to be buying a lot of shares, that there's something big that might be happening, so we can kind of ride those catalysts out. That strategy has been working. It's been working well for me long term, but recently in the market, I've missed a good chunk of them, actually. It hasn't been going the way I wanted, but finally it's good to see that these are working again. So just something to keep in mind. Again, the other big FDA play that I'm going off of is Eton. This one we have, I think, end of May 24th, I believe. I don't have the date off the top of my head. Maybe it was the 28th, but it's in a week or two that we're going to be seeing the FDA plays on Eton as well. So that's where the portfolio is sitting at. Let's take a look at everything else going on here, guys. What I want to share with you is it's really, really risky right now. Okay, I want to phrase this the right way. What was able to work last year, where you could get in on a lot of these hype plays and you can ride them up, and then you're gonna double up, triple up, even quadruple. That's not the situation right now, guys. So you have to change the strategy. Okay, I teach you here how to build wealth, and I'm also teaching you some strategies in the middle as well. To build wealth, you just got to make your portfolio like a cake, like I always say. You got to have the foundation layer, a middle layer, and then a frosting layer. I see my beginner how to invest for beginners video, and that's how I've been able to teach a lot of members how to establish themselves well. When it comes to trying to do these high growth portfolios though, you can't just be chasing plays, play after play after play. I mean, if we take a look at some of the other big names that have been out there, Zomedica, that one was a big run up before, but now look where it's sitting at, 80 cents. That was actually cheaper than I even bought in on. We can also take a look at Tesla. I mean, this is not to say Tesla's a penny stock or anything like that at all, but this company, you can see the fluctuations in the market, guys. This is a good time, in my opinion, to buy if you're looking to keep this longer term. People say that Tesla is effectively an ETF just because of the amount of industries and different sectors that they have going for them. So in my opinion, Tesla is a good purchase. So that, for me, Tesla is the main thing that has given me a lot of wealth. It's one of my first biggest purchases that I did when I was younger. Tesla, Apple, those are like two of the big cornerstones of my portfolios from before, and then I've learned other things afterwards. Other thing we got to look at, if you see this Microsoft as well, take a look at where it's sitting at, guys. This entire market is taking a hit. So when you're trying to go in and invest, either buy and hold, okay? Buy and hold if you're in the right place, or take a step back. Hold. It's okay to hold on to cash. It's okay. Cash is still king. It's okay to hold on to some cash, and then wait until you can see some sort of recovery. Or if you're trying to get in on those FDA plays like I'm doing, sure, because FDA plays are they work a little bit differently than the rest of the market, because even though the whole market is taking a hit, you can still see some of these FDA companies, pharma plays, they still have their run-ups. So you can kind of play it along like that. But if you're just trying to do these sort of strategies that we were doing last year and stuff like that, it's gonna be a little bit murky, guys. I keep telling you, look, today is May 12th. I'm recording this. We can expect this, in my opinion, till July, August. That's really September. Those 3 months right there is when we can start seeing it's a little bit of a change in the market sentiment. So that's why right now you can just kind of do these small things, this and that. You can also look into crypto if that's your thing. And then once July starts coming around, start averaging into the plays that you enjoy. Not enjoy, it's the wrong word. Start averaging into the plays that you think are going to be doing well, and like these undervalued ones. So if we still see around that time frame, a company like AMD is still trading low, Redfin is still in the 50s, we can start averaging in. So then by the time September hits, and we're going to be writing those catalysts up and all of those good things, that's when we make a lot more money. You see how I'm saying, guys? It's all about risk to reward in this whole game. And right now, there's a lot more risk to reward, depending on how you're playing it. Okay, I don't want to just make a blanket statement, but you kind of have to play it like that. A lot of people are still trying to average in on BNGO, FRSX, Palantir. These are all great companies, and there's nothing wrong in averaging now. Just don't expect big run-ups to come and then stay for like the next several months. I mean, we just saw yesterday Palantir went from like $18 all the way up to, it hit like $20, and now look what happened. I keep telling you, we're going to be going through these waves. Just expect that, and then you can kind of capitalize on it now if you're okay with holding longer, or you can just average in around July time, which is what I'm going to do. And you may not get as good of a deal. I'll be honest. I can't promise Palantir is going to be below $19 in July. All I can say is that sort of murkiness that we're going through right now, the ups and downs, it's going to start to ease up a bit at that point. At least that's how I'm thinking. All right, guys, I know you guys are hurting in your portfolios. I'm showing the reason why I came up with this whole journey is to show you that I am too, and I ride with this whole journey with you step by step, and I walk you through day by day. When it's red, it's red, and when it's green, it's green, and I show you open and transparent. Trust me, if you look at my 3 months, guys, I lost right here 50 grand in 3 months, and it's a hard thing to look at, but this is the reality. And forget the 50 grand number. Let's look at the 30% mark. Okay, this was where I learned my lesson in that time frame. When I was hitting that 150 mark, I still remember recording the video that day. I was really considering just taking the money out and then putting that as cash just to sit on the side, and that was my mistake. And then I had the same issue again that happened a few weeks later, and this is where it's at now. I've learned I switched up the entire strategy where I'm really going in for these FDA plays and writing out catalysts like that, just because this is really a high risk, high reward type of portfolio I'm doing to 10x in 2 years. This is not how you build wealth, guys. Do not mimic this portfolio. All right. Other than that, I wish I had better advice to give you right now. I don't have any new hot plays. I don't have any new big things like that. I know there's a lot of channels that are still putting them out there. And I just want to tell you guys, be cautious who you're listening to. Be cautious where you're investing right now, because Let me tell you something. When a lot of these YouTubers, they make these videos, this stock is about to double, it's going to explode, get in now. You know, you may not be getting in at the same price that they are. And then two, for them to lose whatever money that they show you or whatever that is, it's pennies. And the amount of money they make by just making a video like that will cover any loss they could even make off of the stock itself. And the person who ends up getting hurt is really you guys, the viewers. And I really feel for you, because I've been in that position in my life when I first started investing when I was like 19, 20 years old. And you know, I fell in for those things. And let me tell you, people will not have your best interest at heart, and you can't just trust it with you know, with no knowledge base or anything like that. You know, I don't mean to go off on this side tangent like this anyways. Look guys, I just care for you. That's all I'm saying. I have been in the position where I had no money in life, and I've made a lot of mistakes, and I learned a lot from those lessons. I'm happy I made those mistakes, quite honestly, because I wouldn't be where I'm at today. But I don't want you guys to make the mistakes. Take the lessons. That's what I'm trying to tell you. Take the lessons. And the key lesson I want to give you guys is be cautious who you're listening to, and you don't need to always get in on all the plays, okay? All right, fam. With all that said, stay happy, stay healthy, and let's get wealthy, all right? Take care.